I think that Bitcoin's returns are going to accelerate over time. And in this video, I want to explain to you why I think this is going to be the case. Let's get started. A lot of people think that as Bitcoin gets bigger, its returns can't be sustained and the returns will decrease over time. And there's no way that Bitcoin can sustain a 35, 40, 50% return over the next few years. But I want you to take a look at gold's returns. You can see here over the last year, gold has returned 59%. Over the last 2 years, gold has had a compound annual growth rate of 48%. Over the last 3 years, it's had a compound annual growth rate of 37%. You can see the total returns over the last 3 years here. The point that I'm trying to make here is that people think that Bitcoin is going to have diminishing returns because it's worth $2 trillion, but gold is worth 27, 28, 29 trillion dollars, and it keeps rising. It'll keep going up for a very, very long time, even though gold has been around for 6,000 years. You have to understand that the returns of any asset in terms of fiat currencies are completely fake. The fiat currencies can be created out of thin air. More and more units of those currencies, like US dollars, Canadian dollars, Chinese yuan, Japanese yen, whatever the currency is, more and more of those units will chase the same number of assets, and that will go on literally forever. At some point, the Federal Reserve, the US government, will lose control of the US dollar, and nobody will want dollars. Everybody will only want hard assets like Bitcoin or gold. I actually think that Bitcoin is so much better than gold, and at some point it will catch up to gold's returns. In the last couple of months, it's been lagging behind, and that's perfectly fine. I'm okay with being patient. If you take a look at the price of gold over the last couple of decades, it almost looks like a meme stock. The price just keeps going up and up and up. And the reason for this is that gold is a much better savings tool than US dollars. Everything else, including stocks, including real estate, all of those assets have counterparty risk. The only assets that don't have counterparty risk are Bitcoin and gold. You can see here that gold's returns are accelerating. Gold has grown more in the last 3 years than it grew in the 6,000 years before that. Let me repeat that. In the last 3 years, gold's price has gone up more than it went up over the 6,000 years before that. When you think about that, it will blow your mind. You're going to have to keep thinking about it. You're going to have to wrap your head around that. Over the last 6,000 years, gold went from $0 all the way to 1,600 US dollars. And in the last 3 years, gold went from 1,600 US dollars to 4,200 US dollars. So when people tell me that Bitcoin's returns are going to diminish, it doesn't really make any sense because I know that the US dollar is fake money. When Bitcoin is priced in US dollars, it will always go up because more dollars can always be created. The supply of US dollars is increasing exponentially. So why wouldn't more of those dollars find their way into Bitcoin? Another trend that I noticed over the last few years is that since 2022, Bitcoin's price has gone up steadily. It hasn't had any of those explosive growth events where, like in the past, Bitcoin goes from 1,000 to 20,000. It hasn't broken people's minds yet. I think this current trend is very similar to what happened between 2015 and 2017. So in 2015, Bitcoin was about $200 or so. Until 2017, it grew steadily until about $1,000. Then in April of 2017, it exploded. It went from $1,000 per Bitcoin all the way up to 17,000. And at one point, it was up at 19,000 per Bitcoin. The colorful dots represent how much higher Bitcoin's price is compared to the 4-year moving average. And you can see here that at some point in every cycle, it goes to 4.5 times or more compared to that moving average price. We're going to see that in this cycle as well. Or if we don't see that, I think we're just going to keep going up. We're going to keep grinding up literally forever. For Bitcoin's price to crash 70 to 80%, we have to have a blow off top. And after that blow off top, the price that it falls to will still very likely be higher than wherever Bitcoin's price is today. Think about all the fear that the markets are in because Bitcoin's price is at $111,000. This chart here shows you the price of gold in terms of Weimar marks from 1914 all the way until 1923. This is really interesting because you can see here that the price accelerates over time and volatility actually increases. It doesn't go down. A lot of people think that Bitcoin's volatility is going to decrease over time, but what's going to make that happen? Bitcoin is a finite asset with an inelastic supply, meaning if people want to buy it, they have to convince other people to sell it to them. And this just means that at some point, there's going to be some kind of blow off top. There's going to be some kind of repricing event that makes it so that Bitcoin's last few months seem tame in comparison to the volatility that we're going to see in the next few years. So you can see here that gold was one Weimar mark in 1914, but in 1923, it was up to a trillion Weimar marks. And that's crazy to think about because there are probably people who sold along the way who were thinking that, oh, we're so smart. We got these Weimar marks, we have these pieces of paper, and now we know that we can spend these pieces of paper on whatever we want. Nobody wants gold. But at some point, their minds were blown. The prices kept going up and up and up. The people who sold at 100 got left behind, and then the price went to 1,000. Then the people who sold at 1,000 got left behind when the price went up to 10,000. Then the people who sold at 10,000 got left behind when the price went to 100,000, and so on. At some point, the price was $1 trillion per ounce of gold. And I want to show you what this debasement looked like. All it was the government creating more notes with bigger and bigger numbers on them. So you can see here, at one point there was a 10 mark German Weimar banknote from 1920. Then there was a 50 mark Weimar banknote from 1920. Then there was a 500 mark banknote from 1922. Then you had a 5,000 mark banknote in 1922. Then it jumps to 10,000 in 1922, and so on. So you can see here, 1 billion in 1922. Then you have a 50 billion mark note in 1923. Something that you'll notice is that as time goes on, these notes have less and less detail. There's less and less work being put in creating them because they're worth so little. They're nearly worthless. So you can see here, this one is the 10 mark, looks pretty great, pretty detailed. Then you have the 50, looks pretty great, pretty detailed again. Then over time, it seems like the notes become less and less detailed. You have the 500 here. Then you have the 5,000. The 5,000 looks pretty detailed. It's a little bit less detailed than the 10, but over time you can see that there is a difference and it's becoming less and less interesting to look at. Then the 10,000, it has less ink and it just doesn't look as great. It doesn't have that much detail. Then you have the 1 billion mark, and of course, this is a little bit less detailed. And then this 50 billion mark note just looks embarrassing. It's just a piece of paper with some printed numbers and letters on it. What's the difference between this note and a US dollar note? What's the difference between this note and a won? And what's the difference between this note and a Zimbabwe dollar note? It's all the same thing. It's all pieces of paper. The only difference between these notes is who issued them and the face on that piece of paper. Whoever saved in these currencies always ended up going broke because it doesn't matter how many zeros your government adds to your currency. At the end of the day, it's still worthless compared to the things that you actually need to survive. So over time, as more and more people want to get rid of their government issued currencies, the prices of hard assets like gold and Bitcoin will rise, and they'll continue to rise literally forever. At some point, I think Bitcoin is going to break out of this blue or green channel and it's going to go to yellow, then it's going to go to red. And at that point, Bitcoin will probably be more accurately priced. There's so much buy pressure right now, but there are a lot of people selling their Bitcoin as well. So what's happening is that the price is just moving sideways. As the people who want to sell their Bitcoin find their buyers, they're able to get rid of their Bitcoin and fulfill demand for Bitcoin. But at some point, the sellers will run out. Bitcoin will run out at every single price. At some point, the current price will seem like a rounding error because at that point, more people want Bitcoin than whatever is available in the market. The only way to get out of this is for the price to go vertical. So Bitcoin's returns will accelerate over time. I don't subscribe to the diminishing returns theory at all because the US dollar is worthless. If you think that Bitcoin's returns are going to decelerate, it means that you don't quite understand how fiat is created. It doesn't matter how big Bitcoin gets, just like gold, it will see those 50, 60, 70% years for a very, very long time going forward. As Bitcoin's price accelerates, the people who can buy 0.1 Bitcoin, the people who can buy 0.01 Bitcoin, they're going to get priced out and they're not going to be able to buy what they're able to get today. So stack as much Bitcoin as you can. And in the meantime, sign up for this free webinar that I'm going to be doing in a couple of weeks. I'm going to be explaining to you how to use the buy, borrow, die strategy with Bitcoin. You can scan the QR code or you can check the link in the description below if you want to join. I also recommend that you watch this video here where I explain to you that the illusion of perfection is holding you back from building wealth.